Good morning, Tom Wilmot speaking. For a couple of years now, my Zeelander Flytrap trading system book has been on Amazon Kindle, available for download, and PDF versions available. Should you contact me, I'd be happy to share them with you so you can see the charts even more clearly than in Kindle. I'm following up this morning to show you that the strategies are still working great, in my opinion. And sometimes the Forex is even easier to use during periods of great volatility of the markets like we've had during the last week on the U.S. stock exchanges. I'm recording this on the 13th of February, 2018. So let's dive right in. Basically, let's explain first what some of the lines mean on the chart. These two lines are the session beginning lines early in the week. So this would have been Sunday night when the markets opened for this week's activity. And then this is the Monday line here. You can see it's just Sunday afternoon and into Monday morning. On this particular Forex.com server site, the end of day happens in the evening on the East Coast U.S. time. So in any event, that changed from FXCM.com, which was 5 o'clock in the afternoon. This is more like 8 o'clock at night. So what we see here in terms of time frames down below are in fact 5 hours ahead of the East Coast U.S., which is where I'm living. So in any event, we can see that during the evening, on Sunday night, the market moved upwards from its previous lows on the earlier Friday, and we use multiple moving averages, and these averages here run from I think an 8 down to a 30. Perhaps this blue line is a 24 EMA. In any event, those are the multiple moving averages. And basically what happens is when we have a crossover to the upside, as we can see here in this medallion, I have had an indicator written for me that prints this white line on the chart and gives us an opportunity to see where the price was at the close of the candle when the crossover occurred. And that's fundamental to the second strategy in the book. And the idea is very simply that we have to wait until the uptrend is confirmed by this kind of an arrow, which means that the moving averages have caught up with this particular crossover, and now we're trading above the market, and the upside trade has been confirmed. This also has a wonderful aspect of giving you a nice place to begin with your stop loss, because we don't want to come back. Once we've crossed over, we don't want to come back below this white line. So in any event, we saw that on Monday, early Monday morning, the market moved up, then it pulled back. There were sellers that came in to try to take the market back down, and then we had the crossover to the upside and into Tuesday when we had this nice move higher. Now, the idea with this is quite simple. We've added also, and I'm going to change the color so you can see it more clearly, this relative strength index. And when we take a look at that, we can see, when we make it brighter for you, we can see that in this particular indicator, we have bands, and I use 45 and 55 for oversold and overbought. And so when we're above the line and we drop down into this area, we don't want to fall below the 45 oversold, and we want to think about having a nice move through this trend and then a continuation to the upside. Now, one more thing here. If we were to take a look once again, even after moving into Tuesday early after midnight, we see that our downside risk here on the EUR.USD would be just 10 or 11 pips. And we can see also that the move to the upside was on the order of 40 pips. So we have a 4-to-1 ratio, and that's really a nice way to keep your equity curve moving up and to the right-hand side. Now, there are a couple of other indicators you can use, and I'll put them back in because I have a different template that I can show you. First of all, I like to use a 63 moving average just as kind of an underlying, so we know that when we've crossed this one way or another, that confirms the trend further. And it's also possible that in this case you could use, rather than the line, once you've moved above, you can use the 63 EMA as your stop loss level as well. Let's continue on in the week, see what's going on here. We can see that now we're into Tuesday morning, and this is when we're recording this, East Coast, Boston, New York time. And we can see that we've had a nice upside move here. We've pulled back once again here into the 45-55 range. We tended to trade right down to the 24, and I have actually a 28 EMA here, but 24-28 basically. Other people sometimes use a crossover as an 8 versus a 34, but in any event, that's the situation here. We have this upside move. And one more thing is that when we have this, these are alerts coming from other trading pairs. When we have this pullback into the bands and we have this touch here and reversal, this is the rejection that we're looking for. We have a down bar. Let's make it even bigger so you can see it more clearly. We have a down bar. We have the up bar that takes us higher, closes above the EMA 8. And now we know that this is the level that our stop loss should be at. We don't want to come back and take this bar out and be down in this area. We want a continuation. It's perfectly okay to wait a minute if you'd like. This is a 15-minute chart for a pullback into the bands, trying to improve your entry level. But bottom line on this particular trade, we'd have been right here and we'd have had a 29 or 30 pip upside move even as we speak. So that's the situation, and I would just like to share with you one other thought on this, because one of the key points in the book is that you can also basically tend to move down in your time frames. If you have something like this, which is moving much higher very quickly, you can take your marker, put it right after the arrow that shows that we're in an uptrend, and then you can drop down, say, let's say to a 1-minute chart, and we'll pull over and see where our red line holds us. Come on, let's find it. Here it is right here. We can see here on the 1-minute chart, we have the pullback into the bands, the rejection, the nice move right down here. And so when you have a move that's accelerating very quickly to the upside, drop down 1, maybe 2 time frames, and then you can pick up the trade. Once again, we'd be here with our stop loss level. You can see even when we come down and test it, we're okay. We can move our stop loss up as the higher low comes into play. Here we go. And so from this particular place here, we would have a move even on the 1-minute chart in the EUR.USD. That's a 27 or 28 pip move with very little downside risk. So, hope that helps to clarify. Once again, Zeelander system on Amazon Kindle, and if you need a PDF to see the charts more clearly, please let me know. Thanks a lot.